breakdown. And before we get started, I want to show you the important key aspects in terms of what we do when we trade. Okay, so one of the first thing you notice is that we use the Genesis blocks. All right, the order block, same thing, just a different name for our brand. Breakup structure, liquidity, mitigation, target highs and lows, wick, open body, and stop loss. Okay, so looking over here, we can see this liquidity. It's basically just equal highs versus equal lows, and then for breakup structure, it's basically just where higher high is broken, then a higher low, then higher higher, then a new one's formed. You can see breakup structure. That's for the bullish trends. Okay, and then for the bearish aspect, you basically just go like make a lower low, lower high, new lower low, breakup structure. And then for the as you can see for the Genesis candle, we do use the new method where we use the wick and the body and the 50, then the stop loss. Same concept, but just that we now use the wicks in terms of like opening the candle for smaller candles, which will be demonstrated in once we present that. So yeah, that's just the inverse of both of those. I will send that in the group chat as well. So just keep a lookout on that, and yeah, we'll go from there. So with that being said, we are going to go ahead and basically go over GBPUSD and a trade that was taking earlier this week. All right. So as you can see, what we have here is that we want to look for mitigation, liquidity, all kinds of things, right? And as we can see, we are currently in an uptrend. So what does that necessarily mean? You want to look for buys, okay? That's one of the first few things you always want to do is stick with trend, okay? Unless you really know what you're doing, then you can evidently, basically counter trade. I still don't suggest it. I don't really do it anymore. It's just not really that advisable. But yeah. So yeah. Back to what I was saying. So another key aspect here is that you always want to make sure that you're choosing the correct order blocks. Okay. So when you first start, it can be a little bit confusing. You might see like this, and then you're gonna start asking, so how do I know which one works best? How do I know which one to choose? And okay, and I'm gonna show you like this right here and this, and like how you could actually pick your order blocks. Okay, so as you can see here, we have 3 order blocks. All right, that's cool and all right, and we also have one right there. Okay, and of course we have these and these and these and all that kind of stuff. All right, so yeah. So with that being said, this mitigated this candle, this one mitigated that candle. So what does that tell us? That this is a valid one. And why is that? Because it also had a bullish move up and took out this breakup structure. So why is this not valid? It's a valid candle, but it's not what I would choose. And why is that? Because all this candle only broke structure. It didn't feel in no type of mitigation. It didn't feel in any inefficiency, like any of that kind of stuff, you know what I'm saying? So technically I just would not choose this. This would not be my area of interest. I don't have any interest in this candle whatsoever, so I would look lower. And you always want to go for the lowest candle as well, okay? But then this one, you're going to see here how price base, I'm going to clear everything real quick. You're going to see how price basically, oops, let me add this for y'all. Okay, you're going to see how price basically mitigates this area. So if I add a trend line or even, you know, whatever you want me to add in, you're going to see how it mitigated this candle. Because remember I told you, you have the wick, you have the body, and you have the 50. All right. So now I know for a fact that we do have a candle that has been mitigated, which is one of my key aspects when it comes to trading. Okay. So now that I know that that is my area of interest, I will set my thing there. But this is not where I enter. Okay. Um, where to actually enter is where it's going to be inside of the point of interest. And what I mean by that is basically I would technically go to the lower time frames, all the way from like all the way to the minute maybe, in order to find my actual entry. So just our point of interest. So our point of interest basically just means like where you wait for price to reject. Once price rejects, then you go to the lower time frames in order to look at actual entries. Okay, so we're gonna let it play out. We're gonna see how it does, and then as price starts getting lower, you're gonna see what really happens. You can also see how price kind of starts playing around this area. When that happens to me, I don't take that kind of trade. All right, because I just feel like price would just bust right through. It's just grabbing supply or demand, all that kind of stuff, and it just shoots directly all the way through. This is also invalid as well. You can see that rejection showing you that's getting ready to sell. So I would not take this whatsoever. Um, yeah, so as we can see, we're getting closer. So I would start going to like the 2 hour, 3 hour, start looking for possibilities. As you can see, this is also another candle, which mitigated off this. This will also hit the inefficiency. So it's a bunch of mitigations, which makes this a little bit more valid for me. And as you can see, there is one rand candle over here, but that's okay. But it still goes up. It takes out all of this. In other words, break of structure, which is evidently what we want. Like I said, market aspect is a really important key here. So you can see back-to-back break of structure. We are now continuing our uptrend. Okay, so that is fine. Let's see what we got here. So we're gonna wait for that point of interest to activate, and then once it does, we're gonna click huge quick pause. So great. Great activation. All right, let's go take the 4 hour. We can see there was an activation in 1 hour, activation on 2 hour. I'm sorry, rejection, my bad. So on every single time frame, we have a nice rejection. So with that concept, I know for a fact that I'm going to go to the lower time frames. And by the lower time frames, I mean that I can now see in the 50 minute that's beginning to make what we call a Genesis candle, order block, sponsor candle, whatever you want to call it. Okay. So that is what we have here. That is what's forming, and that is exactly what we want. But the thing is, we wouldn't enter from the 50 minute. Okay. So we're going to kind of let things play out a little bit. As you can see, this is also entry. But let's go out onto maybe the 20 minute to see what we have cooking, the 7 and 10 and all that kind of stuff. You kind of like, just if you just look at that, we have another one forming right there. You kind of want to let it play around a little bit, just a little bit. Let's see if I go to the 7 minute. Okay, you see this right here? This activated on this entry. So this is a valid candle, which rejected, okay? We can see that rejection off here. So this, and you can see how this was just mitigated. So if this continues to buy up, this will be evidently become our new entry. So we're gonna let it play out a little bit, and we want to kind of see a small break of structure. Okay, so there we go, break of structure. That is exactly what we want. So once we have that break of structure with a mitigation, this is where we look to enter. Okay, there's also some Wyckoff here, but I'm not gonna explain that here. But I'm not gonna go over any of that right now. But and as you can see, this is your target. So what's gonna happen here is I'm gonna set my long position, and from here all the way up to up there, and then your stop loss is going to be right under the candle, so it should be like right there. 5 pips for 5 pips. It should be 5 pips or so. I mean, you can enter at 50 if you want. It really depends. I mean, we can just put it right there. It'll be 3.5. It really depends on you. I tend to go for the smallest ratio, so my stop loss will be 3.5 pips. So we're gonna see how that plays out. You can miss, you may not. You never really know. We're gonna let it just go. We're gonna go fast forward. Okay, so there we go. First break of structure. We're gonna watch it play out, whether it activates or it doesn't. We're just gonna see how it goes. We can still see continuation of uptrend, which is exactly what we want. And then we're gonna see how that goes. Continuous uptrend. So let's see. Maybe I should make it go a little faster. Evidently, let me make sure. Let me remeasure this really quickly. Yeah, this is the trade right there. But I did take the open. Okay, but I did take the oopsie. Let me go back. I took the open, but I want to show you how you can make your stop loss smaller. So, but demonstrating that is actually what. But yeah, you have the ability to take both. I'm just saying that if you want to make your stop loss smaller, then you would go with putting your 50 here. But if I kept this at an institutional number, which is not, then I would be active in the trade. So as you can see, I think that it's 3529, and that is not the number you want. And since you're buying, basically, you want to make this an institutional number. So that's 9. This will probably just becomes 2968 because you want to make it closer to 9. So you just make this 0. So it's gonna become 30. Okay. And if you round it up, there you go. You're in the trade. So when you put in your MT4, make sure your numbers are 2, 5, 8, or 0. So you got to round them up. And then as you can see, I am now in the trade. So basically, that is actually how you do it. And then you can see great rejection, but we want to see a break of structure, which is up there. Okay. So once price breaks this area, stop loss will be at break even. There we go. But I mean, it was a small break of structure, not exactly what we wanted, but we still got to wait. We're still in the trade. Like we want that really strong break of structure. This is exactly what we want. All right. And then this is where I'll set my take some small partials, just very small partial, but my stop loss will stay at break even. So as you can see, that's what's currently going on right there. We're going to continue to let it play. I'm going to actually put it all the way in fast mode and all that. So yeah, as we can see, it's still going. We're letting it play out. And yeah, just right there. Right there. Nice and gone. 2.6 pip stop loss for 178, 79 pips. Pretty simple. Nice trade. Like I said, it's nothing easy. It takes time to learn, but this is just a general description of how we went over GBPUSD, which I sent in the group chat. I did not send the signal, but I did send the trade. Okay, but that would evidently be my phone. But as you can see, it hit TP. Pretty nice trade. Like I said, just keep updated, do your studying. You'll get there evidently. No drawdown, none of that. But yeah, any questions? Just let me know.